Now let's look at the second category of the session, which are more relevant for from the point of view of your accounting. Exempt income, expenses that are deductible and expenses that are not deductible for corporate tax purpose. Let's see what are the exempt incomes. So these are the incomes that are not subject to tax. Okay, so though you may have these incomes, but when you submit your corporate tax, you'll be excluding them from computation of taxable income or taxable profit. So what are they? Generally, the dividends and other form of profit distributions received from a juridical person that is a resident in UAE. So any dividend or any other form of profit distribution received from UAE company. So this could be received by a company or an individual. So that will not be subject to tax. The reason being that this particular company in UAE is already being subject to tax. After paying the taxes of the company, that company is distributing dividends to the investors. So it will not be subject to tax again. Second category is dividends and other profit distribution received from a participating interest in a foreign juridical person. First point is about the dividend received from a local company. Now we are talking about dividend received from a foreign company. So you have investment in a foreign company and you receive dividend from that particular company. You need to see whether that dividend or profit distribution will be subject to tax or not. So there's a particular term used, participating interest here. So that is crucial to understand. So participating interest means you as an investor, he is owning minimum 5% of the share capital voting rights of that particular foreign company. And you also have eligibility to get more than 5% of the profit distribution. And there are a few other conditions to comply with. If that being the case, then it will be considered as participating interest, and any dividends or profit share that you get from that particular investment will be exempted income. Okay. So in the first 2 points, we have seen the dividends and profit distributions we have seen from the investments. The third point talks about any other income that you receive from participating interest. So you are a shareholder in a particular company and you're receiving other incomes. What are other incomes? Other incomes other than dividends, which are capital gains. When you sell your investment, you may get profit or loss. That is considered as capital gain. Or any foreign exchange gain or loss out of the investment. Or any impairment gain or loss on the investment. So all these are considered as other income. So that other income in the hands of the investor will be exempted only if they comply with this participating interest condition again, which we discussed in point number 2. Income of a foreign permanent establishment, we discussed in the previous slides. Income of a foreign permanent establishment that they own, they can elect whether they want to be subject to tax full, means you have a branch outside UAE, and that outside UAE they are conducting business in full. So that will be considered as foreign permanent establishment for UAE company. As I mentioned, you can either elect to be subject to tax in full, or you can elect to be exempted. So if you elect to be exempted, that's when it is called as falling under category 4. Income derived by a non-resident person. This is also non-resident person who are operating aircraft or ships. A non-resident person who is into the aircraft or ship operating business in the international transportation, they are also exempted. The only condition in that the respective country also has reciprocal rule, which means, for example, let's say that company A is established in USA and they are conducting aircraft and ship maintenance, operating business in international transportation. And if they have any income in UAE, and that will be exempted only if USA is also allowing UAE-based companies to consider their income as exempt income. So both the companies should have similar rules. That's when it will be exempted in the case of non-resident businesses operating aircraft and ships.